Okay, welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and featuring the senior market commentator, Darren Sinden.
Afternoon, Zach.
Afternoon. I take it you may have acquired my man flu, is that right?
I think I'm in the early stages of coming down with it, yes.
I just thought you were more husky and heavy than usual on the vocal front. But markets still uneasy. We're in the run-up now to the FOMC, I suppose. We've had the BOE this morning, and I'm sure we'll go into that right now.
Yeah, absolutely.
Let's have a look.
So a few points to look at. First of all, in the data released over the European session, but we'll start in Asia. An actually surprising positive number from China. So China CPI, Consumer Price Index for August, on a year-on-year basis up +2%, ahead of the forecast of +1.8%, and again ahead of the prior read of +1.6%. That might sound like it's good news, and it possibly is seen in isolation, but when you then compare what's happening in consumer prices with what's happening with factory gate prices or PMIs, Purchase Manager Index prices, that's not so good news, because the PMIs are falling sharply, have been for the best part of a couple of years or more, whilst in food inflation, which is what this really represents, seems to be getting a hold again there. So that divergence is another problem for the People's Bank of China to wrestle with, and I guess people will be keeping a close eye on that now to see exactly what happens there. And then back into Europe, French industrial output for July, a month-on-month number. This again, something of a disappointment, -0.8%, so actually negative. That's compared to the forecast of a +0.2% read, and the prior -0.1% read. So another troubling number for the French economy, and they do seem to be coming rather thick and fast at the moment.
Right, so that's sort of everywhere, really. That's sort of coming through in lots of other countries as well.
Indeed, but you know, we flag France because it's the second largest economy within the Eurozone, and you know, if the whole Eurozone is going to turn around once and for all, then you'll need to see France coming to the party. Quick hop over the channel to the UK, Halifax House Price Index for August. Again, we look at the month-on-month number, +2.7%, way ahead of the forecast, +0.5%, and even further ahead of the prior read of -0.4%. Interesting to note that the year-on-year data shows a +9% rise in UK house prices. What we don't know from that headline number, of course, is what the regional breakdown is. Nonetheless, it's an intriguing figure, and one which presumably, even though it might not directly form part of the decision-making process, will be in the minds of the Bank of England's Monetary Policy Committee. At midday, we had the interest rate decision from that group of gentlemen and ladies. No change is the verdict. Voting amongst the 9 members was 8-1 in favour of no change on rates, just the one dissenter, and 9-0 on no change or any need to reenact QE. So as we were, I've read several reports this week that suggest that Q2 2016 is being sort of picked out by analysts as an area where we might see a rate rise. We'll see if the voting changes, you know, next month. One dissenter could presumably become 2 or 3.
I suppose it's not like the old days where an overheating housing market was greeted with an interest rate rise.
No, not at the moment, because of course it's, you know, the house prices are only, you know, one component of the inflationary picture here in the UK, and it's probably the sole thing that's actually rising at any kind of dramatic rate. Okay,
let's go on to the European movers.
Okay, well, we're back in the utilities and power generation sector to begin with. Firstly, E.ON, ticker EOAN in Germany, €9.18, down a whopping 5% this morning. And the reason simply this: the power generator has issued a profits warning and taken billions of euros of write-downs, and has had to abandon its plan to spin off its German nuclear power plants. This is largely because the German government has decided to change the law, or make plans to change the law anyway, to make the original owners of the nuclear businesses permanently responsible for the nuclear legacy. So even if E.ON had been able to spin out the nuclear plants, it ultimately would still have had responsibility for their legacy, so they've abandoned that. And then swinging over to the UK again, home retail, ticker HOME in London, 140.4 pence, and again another big mover down the downside, down 5.5%. Basically, a profits warning again from here, from this group. The DIY and catalogue retailer warned on the near-term outlook after falling sales at Argos, where the Q2 like-for-like sales fell 28%. So, on a comparative basis, you have to wonder really what the future for Argos is. I mean, Christmas is obviously...
Amazon is the future of Argos.
Well, quite likely. Christmas is obviously this time when Argos tends to do better. I wouldn't say well, but better than... But that kind of trading over the summer months is shocking. And, Homebase, the other part of the business, has done pretty well. I suppose that's the truth, that the Homebase would sell more things for the DIY and garden market in the summer, and then you've looked for Argos to do better at Christmas. But whether the investors will tolerate that for too much longer, I don't know.
Right, okay, well, it's an intriguing mix there. Next up, we've got the MA rumours and movers.
Yep, and we're back in the logistics sector in the US, one that we've touched on several times already this year. Conway Inc., that's ticker CNWS, $47.27, up 33% pre-market. And why? Because XPO Logistics, who we've also talked about several times on the show, that's ticker XPO, are closing in on a £3 billion purchase of this rival company. Managements have been in discussions for some time, and late last night they agreed an all-cash deal worth $47.60 per Conway Inc. share, so a handsome premium, sort of 36% premium to the prior close, hence the move in the stock. Just to remind people, Conway is a specialist trucking and freight business, and it provides logistics and supply chain management services to a host of US retailers and industrial companies, so it's really sort of plugged into the heart of the US economy. And XPO has been very acquisitive in the last 4 years. In fact, it's made 14 deals since 2011, and it's helped it grow its revenues to a projected $6.7 billion this year from a lowly $177 million all the way back in 2011. So they're really growing. They're probably not done yet, and I suspect we'll see further deals in this sector going forward.
It's a hot company indeed.
Yeah.
Okay, let's move on to the US data points.
Okay, a relatively thin calendar today. As it's a Thursday, we've got our old friend, the weekly jobless claims. Forecast this week is for 275,000. Remember last week we saw the first break above without a 270 handle for many a week when we had a 282,000 read. So I guess the interest rate dubs will be looking for a higher number north of 280 or further afield. The Hawks will be wanting to see something substantially lower. And then some other data: import and export prices for August. Export prices are forecast to fall by minus 0.4% against the prior read of minus 0.2%, whilst import prices are expected to have been trimmed by minus 1.6% against the prior minus 0.9%. So there may be some clues there as to the health of the US economy and the relative strength of the dollar and what that means going forward. But I think probably the jobless number is the one that most people will be paying close attention to.
Okay, now we go on to the US pre-market movers and levels, and a company which are very close to my pancreas.
Indeed. Krispy Kreme donuts, I think we're all a sucker for a box of their lovely fare. $14.30, down 19.35%. So something's obviously gone awry here, because they posted both a second quarter earnings and revenue miss, and more to the point, they lowered guidance for the full year. So obviously we're not buying enough sugary confection, and that's feeding through into the Krispy Kreme bottom line. And then moving on to Ambarella, one we touched on only a week or so ago. That's AMBA in the US, $68.47, down 6.04%. Just to flag that was on a closing basis, so they are a smidgen easier pre-market. Just wanted to mention why that was. And the fact is that the shares in the video chip maker fell again as GoPro and the GoPro CEO presented at a Citigroup conference yesterday, and it didn't bode well for either GoPro or Umbrella. Last time round it was Umbrella, or GoPro rather, falling on the back of Umbrella numbers, and this time it's Umbrella falling on the back of the GoPro statement. So these two companies are basically intertwined, and what happens to one it would seem.
The bad thing that happens to one tends to happen to the other.
Yeah, absolutely, yeah. So it's
a negative spiral at the moment.
Yeah, indeed. Right, and on to cash equity levels. First of all, starting in Europe, in terms of the FTSE, we're watching 61.60 on the downside, plays 62.30 to the upside. European markets are a smidgen easier this morning, falling off from falls in Asia. For the DAX now, we're watching 10,210, plays 10,330 to the upside, very much around the day's range there. For the S&P, 1927 now to the downside, plays 1950 on the upside. And for the Dow, which had a sharp fall yesterday, 16,225 now, plays 16,300. That's probably the tightest we've been able to get that range for about 10 days, I would suggest. So I doubt that means the end of volatility, and we could still see some sharp swings there. Currency-wise, a little bit calmer. Euro, US dollar, 111.77 now. Our downside level plays 112.12 to the upside. In Aussie dollar, US dollar, we've remained above the 70 handle, so 70.20 on the downside plays 70.94 to the upside, and I suppose the bulls there will be hoping to crest that 71 even number at some stage. Dollar yen, rather pedestrian, despite the sell-off in Tokyo this morning in terms of equities. 120.65 on the downside plays 121.30 to the upside, and cable, 153.34 on the downside plays 154.08 on the upside. You might think that's strange to nominate that level, given that we're traded as high as 154.30, 35, something like that, post the Bank of England. But what I want to see is actually cable close above 154.08 if it can, because what the pattern has been for cable to try to make sort of intraday gains, but not be able to hang on to them. So let's see if we can close above our resistance at 154.08.
Okay, well, let's go on to the final slide of the day in focus.
Well, it's hard to get away from the China story, and I think, you know, we've seen, you know, a large amount of volatility based around this over the last month, but I think it doesn't hurt to come back to the story and just reflect on what it might mean. So recent market volatility has been blamed on China's easing monetary policy. That easing suggested slowing growth in the world's economic engine, but of course the question that we forced to ask is just how much is China showing? New research by Citigroup this week, which is a very interesting report, suggested that real growth rates in China could be nearer to 4% rather than the headline 7% rates that are coming out of Beijing. So a significant differential there.
Didn't Citigroup say there's a 55% chance of a made-in-China world recession?
They did. I think 40% chance was of a moderate recession, and a 15% chance of something that was more akin to 2007-8, which was driven by a financial crisis. So yes, they are quite negative. The moderate recession is actually not as bad as it sounds, but nonetheless, it's food for thought. And the chart in the middle is courtesy of SocGen, and this is a chart that tracks it's called their news flow indicator, and it tracks the number of headlines on a given subject. And here we see a massive peak in the number of articles written about China and China concerns over the last few weeks. So not necessarily telling us anything about the underlying economy, but really just probably telling us how much interest and hype there is around the subject. And if we do see a hard landing, just how hard that might actually hit home in the wider markets.
Well, the problem is normally when you're looking for a soft landing, you tend to get a hard one. So
yeah.
We'll see how that goes in China. Darren Sinden, Admiral Markets, thanks very much for your contribution today, and we'll be back at the same time tomorrow, 1 p.m.